It feels good to make one of these videos again. Welcome to how I 4x'd my money in 2 years with investing. So let's review actually when I first started talking about the company of today's video, Gladstone Land, versus today. The first video I uploaded about Gladstone Land was on April 6, 2020, though the time period I was really accumulating the stock was towards the bottom of the Corona crash. And of course I've owned the stock properly since 2017, though I really seriously accumulated in 2020 because I believe that the coronavirus, the response to it, would lead to inflation, shortages, and then later resource scarcity and conflict. Anyway, when I first bought, you can see here the price at the bottom was around $10.50. Fast forward to Friday in the markets before the close, the highest was $40.79. That is officially a 4x if you followed this channel and looked at the stocks I was covering. So just for a sense of scale, if you invested $10,000 at the right timing, that would now be $40,000. If you invested $20,000, that would be $80,000. If you had invested $100,000, that would be $400,000. And then finally, if you'd invested $500,000, that would be $2 million plus dividends collected in that time period. So what happened? Looking back, why did this company 4x, and what can we learn from this experience going towards the future? Because I have to admit, this 4x exceeded my expectations. I was not expecting the world to become this embroiled in conflict. I've narrowed down the cause of this 4x to 4 reasons, which is funny. Each reason is a reason for the one of the x's in this 4x. Reason number one, I think, primarily is the high inflation the United States and other countries have been experiencing ever since the coronavirus started. This stock was viewed by investors over time as it gained more popularity as an inflation hedge, and I do have to say it has performed very well in that role. I've said this many times on the channel, but in high inflationary environments, what happens every single time is the price of basic input materials and basic survival goods go up. The same thing is true, by the way, and we've experienced with energy and fuel recently too. It goes to show and proves once again, in a high inflationary environment, the closer you are as an investor to the basic input materials, the better off you are. This is because when inflation is going around, people don't know how to price things, right? So let's say, again, you're invested in farmland. You sell the basic foods to make a sandwich, and by the time the grocery store is selling that sandwich, they don't know how much inflation has ticked up since then, so they don't know how to accurately price their products. The basic materials inputs companies, they are in the best position to price their goods, whereas companies that are selling more complicated products don't know how to price their products as well during high inflationary environments because of the changing, inconsistent nature of inflation. There aren't many other exposure to farmland plays on the stock market, so I could tell that Wall Street's been chasing this really, really hard during this high inflationary period, and with so few competitors, especially as you'll find out later, competitors that are so well positioned like land. In hindsight, it should have been obvious that this was going to lead to a powder keg in the share price of the stock. I should have realized that there were so few ways for retail investors to get exposure in farmland outside of the private markets like Bill Gates has been buying, but hindsight is 2020. Now the people right now in Wall Street desperate to get into farmland have to buy from people like me and also people who watch my videos. You get to dictate the price the stock sells at. The second reason I think is the conflict with Russia. Between Russia and Ukraine, which is a conflict zone and a country under sanction, they produce about a fourth of all the world's wheat. So as a result, the wheat market for the entire world has been utterly destroyed, just to be frank. Wheat products are pretty much gone in Germany. People in the US say they can't get wheat thins. I'm not saying it's the end of the world, but obviously it's done a lot of damage to wheat, and so as a result, farmers are scrambling to make up the difference, and a lot of them are transitioning away from corn into planting wheat for this year. But even that is not enough to make up for this difficulty of getting wheat in the West and other parts of the world, so as a result, consumers and farmers are forced to use alternatives. The wisdom of this policy is really paying dividends now. So Gladstone Land as a policy has avoided corn and wheat as much as possible. They don't get involved with those foods, and now that those foods are having trouble and they're not available on the market, that's essentially wiped out the product competitors for Gladstone Land's farmers. So you can see how already on reason number 2, this is becoming the perfect storm. Reason number 3, I think, which is also following right up on reason number 1, is I think that this is becoming a meme stock. This stock is starting to get the Tesla treatment, which can be a good thing or it can be a bad thing. Personally, I don't invest in meme stocks, which is starting to make me look at the door. Meme stock investing is not my style, though obviously other people have enjoyed success in that kind of investing. There is a lot of food paranoia and inflation paranoia, and so as a result, there are people who are buying the stock right now regardless of the price, and this sentiment is definitely helping the stock trade up. And then finally, reason number 4, I think the match in all of this is Cramer, believe it or not. good old Jim Cramer, and not just Cramer in itself, just more generally that the stock went from total obscurity, being one of the most boring stocks in existence, to one of the most exciting and biggest movers in the market in recent years. Gladstone Land has definitely received a lot more attention now that the world environment has changed. So anyway, a week or two ago, Cramer featured Gladstone Land on his show, and as a result, the attention in the stock has definitely spiked up. I've noticed the comment threads I'm monitoring about this have had many more posts than usual. There's definitely more attention on the stock Gladstone Land than ever. Same thing with Twitter, I've been monitoring that as well. Though it's funny, in Cramer's segment, which I'll play for you, he was late to land, but the people who are watching this channel were not late to land, so pat yourself on the back for that one.
That said, Gladstone's most recent leg higher is all about Ukraine. Ever since the breadbasket of Europe became a war zone, this stock has rallied roughly 27%. So the question is, can you continue that rally? Let's start with the positive. Gladstone's a very well-run company. Their acreage is 100% leased, and they've got a strong system in place for bringing new property that's perfect for farming. Long-term, I believe it's an excellent business, and I'd be a buyer at the right price. But I don't think the right price is this price. Right now, Gladstone sells for 46 times this year's funds from operations, FFO. That's the real estate investment trust equivalent of earnings. That's incredibly high. By comparison, our favorite data center REIT, Equinix, sells for 25 times funds from operations. And that's a great one. I can't countenance buying Gladstone up here. Sometimes you just have to admit that you missed it. The bottom line, stock picking is like baseball. There are times to swing away and times when you have to keep your bat on your shoulder and wait for a better pitch. You have my blessing to swing at Alto Ingredients. But Gladstone Land, it's coming in way too hot.
It is funny, he said don't buy this stock at $36 and now it's above $40. I really do think he looked at Gladstone Land too quickly, and you can tell that he likes the stock because he just says, oh, I missed it, the price is too high. So it goes to show if the price were different, Cramer would have bought it. But I really do think he looked at the stock too quickly and missed the bigger picture. Cramer likes the stock, the only gripe he has is the price, and he thought the yield was too low. I will say for people who are investing, the yield on a stock, I mean, I hate to say it, other than dividend chasers, the yield on a stock is almost irrelevant. It goes the same way when a stock has a high dividend. Usually, actually, that's a bad sign. If a stock has a super high dividend, that usually means that the share price has fallen a lot recently, and there's usually a reason for that. So if it's common knowledge that a high dividend yield is bad news, you can actually infer the opposite, that a low dividend yield might be good news, that the stock is running up a lot, the company's making money, and they might in fact raise their dividend soon. And if Gladstone Land is anything to go by, this company has a consistent track record of raising dividends, and I think Cramer missed this. And as I mentioned before, I don't think Cramer was taking into account that Gladstone Land's food product competition, namely corn and wheat, they don't grow those, but obviously they compete against them. People want to eat those versus other foods, right? Have had their position on the food market severely damaged by the conflict in Ukraine. So anyway, what do I think about Gladstone Land right now? I used to consider this stock as a position I would never sell, buy and hold forever, but this stock has changed a lot in the last 2 years, along with the world generally. I've owned this stock actually for 5 years, about since 2017. Land to me is effectively an inflation-protected bond that's better than gold. And the share price appreciation of 4x on farmland of all things is insane to me. And even though Gladstone Land has been issuing shares like crazy this entire time, even share dilution was not enough to keep the stock price down. Could land go up even more? There is an argument for this, though obviously it's not perfect. And number one is that farmland prices and the ability to profit from farmland price increases as a company are pretty slow. It takes a while for the farm market to react, and it might take years for land to fully capitalize in the increase of value in the farmland they control. But obviously that still is going on. It depends too if you think food inflation is still here to stay, or if you think we've seen the worst of it and it's going to get better from now on. That said, and this is obviously a new policy for Gladstone Land, food participation rents have doubled the last year just for Gladstone Land here. And with high food inflation, that definitely is a good sign, most likely for Gladstone Land's food participation rental income. So there were a lot of good things. Definitely with the food inflation, the participation rents could lead to record profits. That is certainly possible, though obviously the flip side is that this stock has run up a lot. It's now trading at a huge multiple to its net asset value, and as Cramer pointed out, the other funds. Gladstone Land is in a position to issue shares at this pretty high price and pay off their high interest debt, and if they issue shares at the right price and raise enough money, that could leave this company with one of the best balance sheets I've seen. Now the question is, did I sell my Gladstone Land? And seeing as this price has gone up so much, what are my next moves? Where do you go from here, right? You're sitting on a 4x. What am I going to do? Am I going to buy? I'm going to sell? I'm going to sell a little bit. How much am I going to sell? How much more would I buy? What other companies am I going to buy? Well, to answer those questions, you'll have to become a channel member. Later this week, I'll be making a video about the follow-up to Gladstone Land, what I'm doing, am I buying or selling, and what are my next moves. That's all for this video, and I'll see you next time.